Dogecoin broke the uptrend I was looking at right here in this morning's video. I was watching support, giving me this trend line going to the upside. We broke that to the downside, and I was saying I was targeting 14 cents. But right after I made that video, we pretty much got a bounce to the upside. But we still have not broke this trend line going to the downside right here. We have resistance, giving me a trend line going down like this. Until we break this trend line going to the upside, then I still think it's possible for us to come down and hit at least this level, maybe even lower. There's a couple bearish things on this chart that I was looking at, but let's take a look at this first. Let's go ahead and get rid of this line because I'm not really watching it anymore. It broke it and then it just popped right back through it, and it's not really holding up right now. But there's another thing that I'm kind of looking at right now, and that's we have support. Let's go ahead and draw a trend line right here at this little support line, something like this. So this line has been kind of pretty much holding support. And what does this look like to you in your opinion? We have, it goes up, then comes down, then goes up, then comes down, goes up, and comes down. This one pretty much went the same height as this one. So this is pretty, in my opinion, this looks like a head and shoulders pattern kind of to me. If we come down and break this trend line right here going to the downside, then that will be it'll be a pattern which we can target from the top to the bottom of the shoulders, or the head to the shoulder, and then drag this to the breakout, maybe something like this. And this kind of lines up with my target sitting at around .14. Maybe it'll even go a little bit lower, sitting at maybe .13974. Let's see, what does it say? .13832. And the last time it wicked all the way down to .13143. So it could wick even lower, or it can, that's where the bottom is on that. So it could go lower, but this is the pattern that I'm seeing for right now, or that's what I think is. We have a shoulder, the head, and then the shoulder right there. Yeah, so if we break this trend line, that's the target that I'm looking at. The other thing that I've been looking at is the Fibonacci retracement levels, and that lines up perfectly with this. If we go back, let's go to the daily time frame. We had a big run up from here to here. So I drew a Fibonacci retracement from the bottom of the trend to the top of the trend. We're heading down. Excuse me. Right now we're watching the 50% level sitting, or right now we're at the 50% level sitting at .15646, and the next one is the 61% sitting at .13925. So that, and then that's pretty much where the target is. Pretty much 14 cents. That's what I'm kind of going with, because that's also a psychological level. The next thing that I am looking at, the other things that I was talking about that were kind of slightly bearish, is right now we're underneath. I'm looking at the 9 moving average basically. We have the 9 moving average right here, and if we're on top of it, that's bullish, and if we're below it, that's bearish. If we go to the daily time frame, we're also below we broke below the daily 9 moving average right here, and so being below it in general, in my opinion, is bearish. It can cause resistance when we come up to it. So yeah, I think that might be a bearish signal, and that might also be a signal that we might be coming down. So yeah, those are the things that I'm looking at. The main thing is that head and shoulders pattern. That's possibly a head and shoulders. I'm not sure. If we bounce right here at this trend line and start going up, then I'm not thinking that's a head and shoulders anymore. It could be just a triangle pattern where we're kind of bouncing in between these two trend lines, and we could possibly break to the upside still. But this is kind of what I'm looking at. Let me know what you guys think, or if you guys agree or disagree. All right, if you guys like the video, hit that thumbs up, and I'll see you in the next one.